I am coming to you today from a swelteringly hot Italy. They have forecast temperatures up to 41 degrees Celsius, which I believe is 106 degrees Fahrenheit. And so this is necessarily going to be a fairly quick market update before I expire from the heat. So let's get started. There actually isn't very much to add in today's market update. This is the S&P 500 using SPX data. Our previous market update was recorded on this day over here. This is the analysis that we've been looking at with an important cycle trough that formed over here in early April. We have been expecting the 80-day cycle trough to form. There is that nest of lows indicating the time at which we could have expected that 80-day cycle trough to form. The actual circle, and you can see we have these circle and whisker structures. The circle represents the exact day at which we would expect the trough to form, assuming that the cycle keeps beating with the same rhythm it has had recently. In other words, the recent average wavelength. And so that would have led us to expect the 80-day cycle trough to form fairly early in June. However, as you can see, the nest of lows is sort of spread out to the right. That is because the shorter cycles have been expanding, and so we were led to expect by that slanted nest of lows a slightly later 80-day cycle trough to form. That 80-day cycle trough has clearly formed. It formed on Monday of last week in the S&P 500, although one could argue that there was some volatility caused by fundamental interaction because of news events happening at the time, in particular the US bombings of Iran. That additional volatility potentially caused price to drop a little below the level at which it formed a possible low the week before. And so one could argue that, in fact, the 80-day cycle trough would have been better placed in the middle of the previous week, in other words, the third week of June. We don't need to split hairs about it. It is clear that the 80-day cycle trough has formed. The interesting thing, of course, is that the 80-day cycle trough formed at about the level of the 80-day cycle FLD, which is something we've been speaking about over the past 2 or 3 market update videos. That is because of the sequence of interactions between price and the FLD that we track. And following a cycle trough of at least 40-week magnitude, we would expect price to first cross above the 80-day cycle FLD, which it did over here in early May. And then at the time that the 80-day cycle trough forms, we would expect the 80-day cycle FLD to provide support, which is, of course, exactly what it did almost 2 weeks ago. And so now that that 80-day cycle trough has formed, what are we expecting? Well, let's just change the scaling on this chart slightly so that we are not preventing our understanding of what could happen on the basis of the top of the chart. That's a great danger, of course, when you're looking at charts. When you scale the chart with price at the extreme edge, either the top or the bottom of the chart, there is a subconscious tendency for us to assume that there's some form of resistance there. Well, there isn't necessarily. Price could, of course, keep going up. If we add our composite model line, you can see that the amount that it is expected to go up is not, in fact, very much. But that is because these shorter cycles, the 40-day and the 80-day itself, have had reduced amplitude. I discussed the reduced amplitude of these cycles in the previous market update video, so I'm not going to repeat that here. But because of that reduced amplitude of the 80-day cycle, the limited extent to which it managed to pull price down into the 80-day cycle trough reflects reduced amplitude and therefore a reduced amount of bounce that 80-day cycle will cause as price rises out of that 80-day cycle trough. Nevertheless, the message is clear, and when it comes to the composite model line, the most important thing is the general structure of the line as opposed to the actual price levels. So we are still expecting a rising market. We are expecting a 20-week cycle peak to form at some point. And then, of course, the next big event on the cycle calendar is the 20-week cycle trough, which we are expecting at the moment in about mid-August. Here you can see the composite model line moving down to the 20-week cycle trough. Now, where is this peak going to be? We do not know exactly where it is going to be yet, but I would like to point out that we have an additional target to consider. That is a target generated by price crossing the 40-week cycle FLD. And of course, we shouldn't generally calculate 40-week cycle FLD targets on a daily chart, so let's quickly switch to a weekly chart for that. Here we can see the 40-week cycle FLD on the weekly chart, and you can see that price came up to that 40-week cycle FLD, but it failed to get above it. And of course, we are considering median price at this point, so let's quickly display the median price. There we go. You can see clearly that last week the median price crossed above the 40-week cycle FLD, generating a target to the upside. That target, as a matter of interest, is at a level of 7,233. In recent market updates, as price has been crossing above these FLDs, I have been identifying these targets. And so we have another very bullish target of 7,233 to consider in the S&P 500. It is not likely that that target will be achieved at this first 20-week cycle peak, however, so that target is probably only expected to be fulfilled later this year. But now let's discuss this 80-day cycle trough in a little more detail. So looking at the shape of this 80-day cycle, here we have the first part of the M shape that will eventually form this complete 20-week cycle, the next trough of which is expected in the middle of August. Now, in the previous market update, I spoke about the concept of a straddled trough, where you get a trough for a cycle that seems to be fairly high magnitude, such as the 80-day cycle in this case, but it is a very subtle or very small trough. Hurst discussed the concept of a straddled trough. Usually a straddled trough occurs in a fairly symmetrical price action. So in other words, the M shape we would be looking at would have this very reduced trough over here. In other words, instead of having a good deep M shape forming, that example is looking a bit of a mess, but I hope you get the idea. We get this very shallow central trough for the M shape. That is traditionally the straddled trough that Hurst discussed. I prefer to discuss a slight variation of the straddled trough, which I call a subtle trough, because a straddled trough implies, as I've just mentioned, this symmetrical price action. However, because of the magnitude of this cycle trough in April, which could, I should remind you, be even greater than 18 months. If you go back to the market update that I recorded, I think it was 3 market updates ago, so about 6 weeks ago, we took a step back and took a look at the longer picture, and there is the possibility that this cycle trough that formed in April is of greater magnitude than 18 months. If that is the case, then of course that explains the bullishness that we have experienced since then. It also explains the subtlety of the 80-day cycle trough. And in the case of a subtle trough, instead of getting a symmetrical price action, we would get a continued bullish move. And only then, of course, will we get the move down into the 20-week cycle trough that we are expecting in about the middle of August. In that case, this is not strictly speaking a straddled trough, according to the definition that Hurst gave for a straddled trough in the 1970s. It is what I prefer to call a subtle trough. But that is really semantics. We have had, if not a straddled trough, then certainly a subtle 80-day cycle trough forming. Bullish pressure is still alive and well, as you can see from the continued bullish up move, and so we are still looking for price to move upwards to form this 20-week cycle peak and only then drop into the 20-week cycle trough in about the middle of August. Here is the Nasdaq using NDX data, and the markets have recently been beating with a great deal in common. That's the principle of commonality, that there is a great deal in common between the different markets. And so we again have an 80-day cycle trough. Here we have the nest of lows. It was expected a little earlier in June, but it has almost certainly formed over here on Monday of last week. It formed, as you can see, just a little bit above that 80-day cycle FLD, which of course is exactly what we would expect following a trough of at least 40-week magnitude, which is what we have here on the 7th of April. And if you take a look at the bigger picture that we discussed many weeks ago for the Nasdaq, you will see why that is a 40-week cycle trough as opposed to the 18-month cycle trough we had in the S&P 500. That is still open for debate. The important thing is that, as you can see, we are still expecting some upward movement. At some point, perhaps in about mid-July, we're going to experience a 20-week cycle peak, and then we're going to watch price coming down into the 20-week cycle trough, which in the Nasdaq is expected slightly later, in about the 3rd week of August, perhaps even towards the beginning of September. Now, as a matter of interest, we are often asked at Sentient Trader, why do we still have this nest of lows? Why are we still seeing circles and whiskers here? Why are there not diamonds when it is so obvious to us, using our advanced human brains, that the 80-day cycle trough has formed? The reason for that is, although it might be very obvious to us as pattern recognition experts that the 80-day cycle trough has formed, the software requires some form of confirmation in terms of price crossing FLDs and so forth. And so it has not yet converted this nest of lows into a stack of diamonds. Does that mean the trough hasn't yet formed? Not at all. You must remember the golden rule is that we do not trade on the basis of diamonds being plotted at the foot of our chart, whether we're using software or whether we're doing it ourselves. We trade on the basis of these nests of lows, which tell us when to expect a cycle trough or a cycle peak if we're performing a peak analysis. And our trading decisions are made on the basis of that expectation. We will trade on the basis of price crossing a VTL or an FLD, providing us with some confirmation that the trough is forming in the markets, and we certainly do not wait for those diamonds to be placed. Many new users of Sentient Trader are bothered by the fact that they're not seeing diamonds yet. It is really not important. We had the expectation of an 80-day cycle trough forming. An 80-day cycle trough clearly has formed, and soon those circles and whiskers will be converted into the diamonds that we are expecting. Taking a look at the Australian index, this is the ASX, and it's proved a very interesting index to track in recent months. We've been tracking it for several months now. And here we have several pieces of information that I'm just throwing at you all in one go. First of all, you can see the important cycle trough that we've been discussing for many months in the Australian market. This is a 40-month cycle trough, in my opinion. I work with a different nominal model in the Australian market. It is not the 54-month cycle that is the standard cycle, longer than the 18-month cycle in Hurst's nominal model. I work with a slightly different nominal model. It doesn't affect things too much at the kind of time frame that we discuss in these videos. The important thing is we have also been expecting an 80-day cycle trough to form in this market. We were looking at it forming in about the 2nd or 3rd week of June. Here too, this 80-day cycle trough has almost certainly formed on Monday of last week. Again, here is the 80-day cycle FLD, which is the FLD that we were watching to provide support for price as that 80-day cycle trough formed. If I clear these markings, you can see price didn't quite get down to the level of the 80-day cycle FLD. It in fact formed a trough slightly above it. This market is still bullish. There is nothing that is warning us of a turn to the bear. However, with regard to our discussion of straddled or subtle troughs, let me point out that the 80-day cycle trough so far is certainly a subtle trough. In other words, it's a fairly insignificant move down into that trough. That makes it a subtle trough, and it is so far still providing the possibility of a straddled trough in terms of that straddled trough potentially being symmetrical. I am not really expecting a symmetrical price move. In other words, I'm not expecting price to come all the way down here again to form the 20-week cycle trough, which is also expected in this market in about the 3rd week of August. I'm not expecting that because of the bullishness that is implicit in the fact that this is a much bigger magnitude cycle trough that formed in April. And so as the composite model line, this dashed orange line, shows us, we are expecting a peak of the 20-week cycle to form fairly soon in early July, and then price will drop down into the 20-week cycle trough expected in August. Don't pay too much attention to the price levels of the composite model line. The reason for that is that the amplitude of these cycles has recently been diminished, as I pointed out in the previous market update videos, and it is that amplitude that is used to calculate the expected level of the upcoming peak. The diminished amplitude of the 80-day cycle has has been overpowered, of course, by the longer cycles, as discussed in the previous market update video, and there is likely to be a good deal more bullish pressure than has actually been measured recently by Sentient Trader when calculating that composite model line. So do not be put off by the limited upside potential shown by the composite model line. The fact is this market is still moving up to a peak. Now, the other line that I am displaying on this chart is the 40-week cycle FLD. We've mentioned this FLD previously with regard to the Australian market, and that is because price has been tracking along that 40-week cycle FLD for some time. Let's switch to the weekly chart to view it better. Here is the 40-week cycle FLD on the weekly chart. Let's change our price chart to the median price so that we can inspect the interactions between price and the FLD. And here we have an interesting situation where we have a price crossing above the 40-week cycle FLD. It's not a very strong cross. It's not a very obvious cross. As you can see, price came above it and hovered just above that FLD. We had a lot of low prices coming down and still touching the FLD. Last week, price came down to the level of the FLD, actually dropped ever so slightly below it and then came back up above it. In this situation, there are various ways of calculating your target. You could use this price cross over here to calculate your target, in which case we would end up with a target of 9,187 for this bullish price move out of this 40-month cycle trough in early April. The other way of doing it would be to consider this a multiple cross as defined by Hurst in his cycles course, and so we take both of these price crossing levels, this one, and we average them and derive a price cross level somewhere over here. That gives us a target of 9,519. Both of those are good bullish targets, and so we are still optimistic that the Australian market is going to give us some bullish price moves. In the past few market updates, we've been looking at the DAX, which has been an interesting comparison to make. Here is the 80-day cycle trough that has been identified in the DAX. Interestingly, that cycle trough you can see occurred on the Thursday, I think, preceding last week's Monday bar, on which the 80-day cycle trough appeared to occur in the US markets. It's an interesting difference between the European and the US markets. As I mentioned, that Monday experienced some fundamental interactions with the bombs in Iran, and so it is quite possible that in fact this 80-day cycle trough is better positioned over here on the previous Thursday, in which case that 80-day cycle trough had a wavelength of 73 days. And so the exact position of that 80-day cycle trough around the world in all the different markets is still up for debate, but it has clearly happened at some point in the past 2 weeks. I'm also displaying the 20-day cycle FLD, so you can see how price came up above the 20-day cycle FLD, crossed above it, confirming that we have an 80-day cycle trough that has formed in the markets. We do not get such clear interactions in the other markets because of the reduced drop down into that 80-day cycle trough, the reduced amplitude of the 80-day cycle. Here is the 80-day cycle FLD, where price was expected to find support at the time that the 80-day cycle trough formed. Of course, it dropped below it a little bit, but not too much. And if we look at that 80-day cycle FLD on a weekly chart, you can see that, in fact, price did come down to the 80-day cycle FLD and find support on the weekly chart at the level of the 80-day cycle FLD. The FLDs should be watched in a time frame appropriate to the FLD, and the 80-day cycle FLD is definitely better considered on a weekly chart as opposed to a daily chart. Our expectation for the DAX is very much the same as it is in the other markets. There is our first 80-day cycle, and that is clearly a subtle trough, if not a straddled trough. Again, we are expecting a 20-week cycle trough to form, in this case towards the end of August. Again, given the probable magnitude of this cycle trough, I'm not expecting a symmetrical price action here. here, which would give us the traditional straddled trough. I am expecting a little more bullishness, in which case we will only have a subtle trough as opposed to a straddled trough. But nevertheless, the next big cycle event to look out for is going to be the peak of the 20-week cycle. Whether it's going to be an early or late peak, we do not know yet, but we need to keep our eyes open for that peak to form, after which price will fall down into the 20-week cycle trough towards the end of August. The Nifty has also given us very clean cycle action recently, following a period of some confusion, particularly in terms of identifying this cycle trough over here. You can see that this cycle trough now in April for the Nifty has been phased as a trough of 54-month magnitude, which is a really big cycle trough. I would take that with a pinch of salt. It is, in my opinion, a trough of at least 18-month magnitude, and so still a pretty big cycle trough. We have our 40-day cycle trough that formed over here. Notice the pin symbol indicating that I've influenced this analysis. I have asked Sentient Trader to position the 40-day cycle trough in this position. Sentient Trader has obliged. It means then that we have a nest of lows for our 80-day cycle trough over here. We have been watching for this 80-day cycle trough, of course, since about the second week of June, and it is very likely that that 80-day cycle trough formed over here slightly earlier in the Nifty than it did in the US and the European markets and the Australian market, and that 80-day cycle trough is almost certainly over here later in the second week of June. Notice here too that the 80-day cycle FLD provided us with support as the 80-day cycle trough formed. In fact, on the day that I believe the 80-day cycle trough did form, this bar over here, price came down and touched the 80-day cycle trough and then bounced up again. And so the situation is exactly the same in the Nifty. Here is our shape for our 80-day cycle. A very small move down into that 80-day cycle trough. It is certainly a subtle trough. It is not likely, in my opinion, to turn out to be a traditional straddled trough with a symmetrical price action. Already price has exceeded the previous high, and so it is likely that we are going to see some continued bullishness given the magnitude of this cycle trough before price turns down and comes down into the 20-week cycle trough, which we are also expecting later in August. If we display the composite model line for the Nifty, you can see here too we have a rising market with a potential peak over here and even another potential peak over here, and here is the trough for that 20-week cycle in about the third week of August. Gold has been moving sideways for a fairly long time. Just a reminder of the fact that we have been expecting a really big cycle peak. This is a 54-month cycle peak to form in gold. Notice that Sentient Trader has positioned the triangles marking the position of that peak over here towards the end of April. Is that definitely the 54-month cycle peak? Not definitely, no. I wouldn't be surprised to see price come up and form a slightly higher peak. Usually in gold, price forms sharp isolated peaks. If that is what had happened back in April, then I would be placing more confidence in the fact that that peak had formed. We have a nest of highs for the 80-day cycle over here in about the middle of July, and so in my opinion it is quite possible that gold is going to have another go at forming a higher peak. How is it possible that we can position such a big cycle peak over here and then I tell you to ignore it? It is because the phasing analysis of the shorter cycles has been quite difficult recently, particularly when it comes to the peak analysis. Notice here we have a prominent peak, whereas here we have the 20-day cycle peak marker. That's not a very appropriate position for that peak. Here we have the 40-day cycle peak, and here it is in the phasing analysis. That's a little bit better, but here we have a bit of an anomaly, don't we? So the point is that this analysis has been fairly difficult to perform, and therefore I don't put too much emphasis on that peak analysis. In my opinion, instead of spending hours staring at the charts until our foreheads bleed, I think it is much better to agree that the important cycle peak is expected at about this time. It's a really big important cycle peak, but it might not have formed yet. so let me hide those peaks for now. The important thing is that we are expecting a really big cycle peak to form, and I wouldn't be surprised to see it form higher up. Now let's focus on the trough analysis, which has been a little bit clearer recently. We have this trough over here in April, which is phased as a 20-week cycle trough, which is, of course, an example of the commonality between stock markets and gold. It is possible that that 20-week cycle trough, in fact, formed over here in the middle of May, where in this analysis we have a 40-day cycle trough. Again, why are we not able to distinguish this? Why can't we answer that question? The reason has to do with the positioning of the shorter cycles, and that has been fairly difficult recently in gold altogether when it comes to analyzing troughs and to analyzing peaks. There are some analysts who believe that the 20-week cycle trough is better positioned over there in the middle of May. I prefer the position in April because of the element of commonality with the stock markets. I always enjoy seeing commonality between the markets. The important thing is that we are also then expecting an 80-day cycle trough if this was the 20-week cycle trough. If this was the 20-week cycle trough over here in the middle of May, then of course this trough will only be a 40-day cycle trough. We are expecting that trough to form, and it should form soon. You can see it is already stretching over the outer right edge of that nest of lows, and so that trough, whether it's a 40-day cycle trough or an 80-day cycle trough, is expected to form soon, after which price should rise up into that 80-day cycle peak that I pointed out a moment ago. The composite model line provides a little more clarity, but notice this rather dangerous thing that's happening with the composite model line. It is basically dwindling down to a horizontal line. Why is that? It's because, of course, of the fact that we have seen this rather sort of contracting wedge or triangular shape forming in the price action. And when that happens, the amplitude of all the cycles gradually dwindles. We don't have any strong cycles moving price up or down. And when that happens, we are working with the recent amplitude and wavelengths of these cycles in order to generate this composite model line. And so as this amplitude has dwindled, so too does the composite model line dwindle into the future. Now, of course, we are expecting these cycles to regain some strength soon. And so at this time, the composite model line is not such a good tool for looking into the future because of the fact that we expect the amplitude of these cycles to increase. And so what we need to do now with gold is to watch an FLD, such as the 20-day cycle FLD. And as price crosses above this 20-day cycle FLD, we will confirm that this trough of either 80-day or 40-day magnitude has formed in the market. As that price action develops out of that cycle trough, we can hope to see some of these cycles gaining some amplitude to give us a clearer picture of where this big cycle peak is going to form. Finally, Bitcoin has given us what would seem to be a very clear indication of this 80-day cycle trough forming over here at 76 days. It is just possible that that 80-day cycle trough could have formed earlier over here at 59 days. Notice that we still have this nest of lows floating beneath the price action because the software will not absolutely confirm the position of that 80-day cycle trough, but it is most likely this trough over here that formed on last week Sunday. Of course, Bitcoin trades on a Sunday, and so it formed on the Sunday as opposed to on the Monday as it did in the US markets. And so it is very likely that that 80-day cycle trough formed. We would have expected that 80-day cycle trough to form at the level of the 80-day FLD, but again, we should watch that 80-day FLD on a weekly chart. So let's quickly do that. And here is that 80-day FLD on the weekly chart, and you can see that price came down to the 80-day FLD. Last week it dropped down below it, but it managed to close back up at the level of the 80-day FLD. Median price dipped down below the FLD certainly, but we do not have a good clean cross below the FLD. It looks as if the price has found approximate support at the level of that 80-day FLD. And so the composite model line gives us a good idea of what we can expect out of Bitcoin. This is the cleanest composite model line we have out of all of the markets that we track. And here we can see the very clear example presented in the composite model line of our subtle 80-day cycle trough. Not so much a straddled trough as a subtle one, but of course that is semantics. Many analysts will call it a straddled trough. And the next thing that we are expecting is for price to move up into this 20-week cycle peak. Remember that that we have some outstanding targets up there. I think $120,000 is one of the targets. I mentioned them in a recent market update video. And after achieving that 20-week cycle peak, we would be looking for price to drop down into the 20-week cycle trough. Here we have a very straggly nest of lows, indicating that 20-week cycle trough is expected sometime late in August or perhaps early September. I do hope you found this market update useful and interesting. If you have any questions, please put them in the comments below this video or join us on our Hurst Cycles Discord server. I look forward to hearing from you.